Hello and welcome to Charting the Markets on Friday, the 21st of July 2023. China earlier this morning announced a new stimulus package to help boost sales of automobiles and electronics with the aim of shoring up its sluggish economy. And this has helped Chinese equity indices to rise, but not other Asian sessions, basically. Other Asian indices didn't really benefit that much from this. Neither did the European session at the open, despite Japanese inflation also coming in at a weaker than expected 3.3% in June, compared to an anticipated 3.5% rise. And this is perhaps on the back of the disappointing earnings we had yesterday from Netflix and also Tesla, pushing equity markets lower at the moment. So we can see when we look at European markets, the FTSE 100 still rising, as we can see here on the daily financial bet, and heading up towards this mid-May low and also the June high between 7,679 and 88. But this was on the back of much stronger than expected UK June retail sales, which helped the FTSE 100 to continue its four-day bullish streak here that started earlier this week when we had lower than expected inflation in the United Kingdom. And as I say, this is now being followed by stronger than expected retail sales for June, which came in at 0.7% compared to a forecast 0.2%. And basically, British retail sales in June were boosted by unusually hot weather and a rebound in food sales after a dip the months before when public holidays disrupted normal spending patterns. So this, as we can see here, has helped the FTSE 100 rise. Now we are approaching this resistance area I just mentioned, where we may perhaps today struggle simply because some investors might take some money off the table, because after all, we've risen by about 5% or just above 5% in the FTSE 100 over the last couple of weeks. And just ahead of the weekend, maybe it might make sense to cash in some of these profits. Now, if we were to rise above 7,688 on a daily chart closing basis today, Friday, which is the end of the week also, which would mean it's a weekly close above that level, then that would be very positive, because it would mean that a medium-term bottom has been formed in the FTSE 100. And don't forget, the FTSE 100 is actually the world's worst underperforming major stock index at the moment. So with these rises we've seen over the last few days, we're heading back into positive territory for the year. And we'll have to see whether we can rise above 7,688, because if so, then a major bottom will have been formed, in which case we could then be heading back up again towards the mid-May high at 7,806, and then also probably towards the April high at 7,938, and head towards the psychological 8,000 mark. But it's a big if. We really need to take up, from a technical perspective, this 7,688 high seen back in June on a daily chart closing basis, and ideally also on a weekly closing basis. Moving on to Germany, what we've seen here is quite a muted reaction over the last few days. And you can see here the DAX 40 yesterday or on Wednesday trying to break above its late June and mid-July highs between 16,187 and 211. And it managed to rise briefly to 16,240, but since then has come off again. It's just trading sideways. And this was on the back of disappointing earnings in SAP shares, which slumped earlier today by 5%. And the software company saying that it extended its losses after cutting its full-year outlook for key cloud sales. And basically, its financial results for the June quarter released yesterday missed estimates as well. And that has led to some weakness in the DAX 40, which is currently underperforming its peers. And you can see here from a technical perspective, as long as we stay below that June to July downtrend line, and also the high seen this week at 16,240, further sideways trading between those highs and the orange line here, the 55-day simple moving average at around 16,000, is likely to occur in the course of next week. Now, if we were to rise above 16,240, then basically the May and June all-time record highs, basically between 16,333 and 428, will then be back in focus. And this technical picture would only change to a slightly negative one if we were to fall through Monday's lower at 15,994 here. In that case, we could see another tumble take us back down towards this key support area, which goes back to April of this year between 15,710 and 625. But right now, it looks as if just a further sideways trading below that resistance area is taking place. Looking ahead at this evening's this afternoon's results, we have Schlumberger and American Express earnings out of the US, which gave us a good indication of what the S&P 500 is likely to do going ahead. We can see here that it has so far slipped through its July uptrend line after having reached a 16-month high of 4,578 on this daily financial bet on Wednesday. It then came off on weaker than expected earnings from Netflix and also Tesla. As you can see here, that not just pushed the Nasdaq 100 down, but also the S&P 500. And here in the overnight session so far, we're trading pretty unchanged here. But if we were to fall through yesterday's low at 4,528, we could then be heading back down again towards the psychological 4,500 mark. And below that, we've got some really important support for the medium-term uptrend between the June and the mid and the late June highs between 4,458 and 47. As long as those hold, further upside may be seen and could then take us towards the 4,600 area with regards to the S&P 500. But short term, towards the end of this week, we are likely to see some consolidation as investors take some money off the table. The US dollar has regained some of its recent losses over the last day or two, and you can see that here on the US dollar basket chart, which has, as I said, regained some of its lost ground over the last 3 days and has had 3 days of consecutive gains. We had this huge decline here on weaker than expected US inflation data. And now we are seeing a little bit of recovery in the US dollar basket. And that is taking us back up again towards the late June lows around 101.48, which is a potential upside target for this dollar basket if we were to rise above the 101 area in the next few days. And since the euro is making up 57.6% of the US dollar baskets, we're seeing the inverse here, that stronger US dollar pushing euro dollar down. We've come off this 112.75 high, which was a high seen last back in February of 2022. And we are now heading back down again towards the April high at 110.95. It together with a mid-April high at 110.75 should offer pretty good support in the days ahead. If we can hold there, we could then perhaps have another attempt at reaching the psychological 113 area. Interestingly enough, the 112.75 high was made just 5 pips below this really important 61.8 Fibonacci retracement of the entire 2021 to 2022 decline in euro dollar, which comes in at 112.80. So you can see here that from a technical perspective, these Fibonacci retracement levels can sometimes work as very effective barriers to trends and can help investors to basically, for example, in this case, cash in some of their profits on these euro-dollar longs. And also you could see here, we had the red line, the 200-day simple moving average coming in at 111.84, which was briefly overcome, but below which we're trading once more. And last time we actually retested that 200-day simple moving average was back in February of 2022, and that's when we actually failed and declined again. Now, I'm not saying this is going to happen this time around, but short term, it looks as if the euro-dollar is likely to slip slightly further and is not going to take out the 112.75 high anytime soon. If it were to happen, 112.80 needs to be taken out again. Also, that's the 61.8 Fibonacci retracement I just alluded to. And then the way would be open for the 115 area to be reached. But short term, it looks as if we are seeing some consolidation in the euro-dollar chart. And perhaps we may even see the late June high at 110.12 being retested over the coming days. The euro is also slipping versus the British pound, and this was on the back of stronger than expected UK, excuse me, retail sales this morning coming in at 0.7% compared to the previous month. So June hitting 0.7% compared to May, and that was much stronger than the expected 0.2% rise in retail sales. And basically, retail sales in the UK were boosted by the unusually hot weather and a rebound in food sales after a dip in the previous month because of all the public holidays we've had back then. And that stronger retail sales data has pushed the British pound up against the euro, and that's why euro sterling has slipped this morning 80 to 86.34. We may actually slip further and reach the orange line here, the 55-day simple moving average at 86.16, and have to see whether we can then hold above this breached April to July downtrend line, which now, because of inverse polarity, is acting as a support line in the next week or so, around 85.78. It can be seen at the moment. If we were to see a consolidation end and then a retest of the 87.01 current July high being seen, with it being broken through, then the next resistance area would be the red line here, the 200-day simple moving average at 87.30. So that is a possible upside target, and it more or less ties in also with the April low here at 87.30, which can be seen back in April of this year. Moving on to the British pound, and the British pound, which had risen quite nicely against the US dollar, mainly on the back of a weaker US dollar on this lower than expected US inflation print. Well, what has happened here is we rallied all the way up to 131.42. That's a level last traded in April of 2022, before then really quickly coming off again on the back of a weaker UK inflation reading, and also core inflation in the United Kingdom coming down more than expected. And that has led to the anticipated rate hikes by the Bank of England coming in at lower levels. We'll probably only see a 25 basis point rate hike at the next meeting instead of the previously anticipated 50 basis point rate hike. And that's why the British pound is also coming off. As you can see here, we are now on track to see not just a week of lower prices for cable, but also to see 6 consecutive days of lower prices with regards to cable. Now, technically speaking, we're currently retesting the mid-June high of 128.48, which may offer short-term support, and it has done so yesterday, for example. But if it were to be fallen through, then the next levels would be the late June lows around 126.87, which tie in with the May high of 126.79, which could also offer support in the days ahead. And then below that, we've got some really important support. As you can see here, this uptrend line going back to March of this year, and that together with the 55-day simply moving average here in orange is seen around the 126.50 area. So that would be, in case of a stronger decline being seen in the next few days, really important support going forward. Commodity markets have also been affected by the recently appreciating dollar again, with some commodities coming off, such as gold and silver, and we'll look at these in a minute. But before we do, I'd like to have a look at WTI, and you can see here that the oil price is heading back up again on the back of that China stimulus package, which was announced earlier today, trying to get Chinese, basically Chinese, I'm looking for the right word here, but basically the Chinese to spend money on automobiles and electronics, and basically that has taken the price of crude oil back up again, because after all, China is the world's largest importer of oil, and if the economy gets stimulated, then obviously that will lead to more demand for oil. And right now we're testing the 200-day simple moving average here in red at $76.68, above which the current mid-July high at $77.17 is being targeted. And once that has been taken out from a technical perspective, the way is open for the psychological $80 mark to be reached, and perhaps we could rally all the way up to the April highs again around $83.40. Now, this technical view will remain valid as long as we remain and stay above the low seen earlier this week at $73.78. That's the last reaction low. provided we stay above there, this previous 3-week advance in the price of crude oil should be followed by further advances with regards to crude oil. And also from a supply side perspective, on the back of Russia's energy minister saying that the country will cut oil exports by 2.1 million tons in the third quarter, in line with planned voluntary export cuts of around 500,000 barrels per day in August, all of which is pushing the price of oil higher, as you can see here. And let's now have a look at gold. And the price of gold has briefly risen to a 2-month high yesterday at $1,987 per troy ounce before it started to come off on that stronger US dollar I just mentioned. And it is now taking us back down again towards the July uptrend line and also the orange line here, the 55-day simple moving average, between $1,958 and $56. So that might offer short-term support, but basically as long as we stay above Monday's low at $1,946, we still have a series of higher highs and higher lows, which is the definition of an uptrend. And as long as that low holds, further upside could be seen in the days and weeks ahead. And in that case, the psychological $2,000 mark could be retested. But if a fall through Monday's low, $1,946, were to take place next week, then it would mean that once again we're topping out in this 1,990 or 80 area-ish. And that could mean that we could slide all the way back down again towards the early July lows around $1,935 and perhaps even the $1,900 mark. So what's that place? Watch those charts quite closely, because basically it could give us a good indication of what's going to happen next with regards to the price of gold. And the same story is really seeing here on the daily chart of, or the daily financial bed of the silver chart. As you can see here, we also traded in a 2-month high at $25.26 earlier this week, but have now started to come off on that stronger US dollar and are on track to reach Monday's low at $24.60. If it were to be fallen through, we would probably retest this key support area between the late April lows and the June highs between $24.52 and $24.50. And that should really hold the price of silver short term. If next week, however, we were to fall through $24.50, then we would probably be heading back down again towards the psychological, or minor psychological $24 mark, and also the orange line here, the 55-day simple moving average at $23.71. So it's possible we're short-term topping out here with regards to the price of silver, but we need to see whether we can take out $24.50 before I would make that call. Unless $24.50 get taken out, it's a possibility still that we could head above the $25.26 seen this week, in which case the the mid to late April and also May highs between $26 and $26.13 could be retested in that scenario. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.